Hi, in this video we'll learn about one more subsidiary book. We'll learn about the cash book. A simple cash book here. A simple cash book means we are going to learn how to record the cash transactions, how they are going to be recorded in a cash book with only one column, that is the cash column. I'll show you the format of the cash book, which is very simple here. The debit side is having some columns here: date column, particulars column, LF number, rupees, date, particulars, LF number, rupees, or you can simply call this as the receipts side and this as the payment side of the cash book. So we are going to record the receipts and the payments in a book called as the cash book. I'll call it as a simple cash book because there are no bank columns or discount columns in this book. Okay, so it's only having one column, that is the cash column. The left side is the receipt side, receipts of cash, and the right side is the payments side of the cash book. So we'll learn how to record cash transactions in this cash book. I have written some transactions for ease. 1st January 21, cash introduced as capital by the businessman. So how do you record this transaction in the cash book? It is a receipt of cash, hence we'll go to the receipt side. 1st January 21, we'll write to capital rupees 20 lakhs. Now if you have cash book is also equal to cash account. So if for one transaction, for a particular transaction, if cash account is debited, then automatically correspondingly the capital account needs to be credited. So what we'll do is we'll open a simple capital account here. For the sake of ease, I'm not writing all the columns. Capital account, debit, credit. Here I will write by cash 20 lakhs. So this is how it is posted in the capital account. Cash account is debited. If you remember, the entry for this transaction would be cash account debtor to capital account. Cash account needs to be debited and capital account needs to be credited. That is what we are doing here. Okay. It is a receipt of cash for the business, hence it is recorded on the receipt side. The cash is coming from capital, that is why I am writing to capital, and correspondingly I have posted in the capital account on the credit side by cash. Okay. Next, cash deposited in bank rupees 5 lakhs on 2nd January. Now cash deposited in bank, that means cash is going out of the business. It is a cash payment, hence I will write 2nd January 21. I am making a payment. The payment is being made to a person called as the bank, so I'll write by bank account here rupees 5 lakhs. And I have to write here the page number in the ledger in which the bank account is opened. Let us say it is open in page number 12. So what I'll do is I'll open a simple bank account in the ledger. It should be already open in your ledger. Bank account, debit, credit. It is, for suppose, or let us assume it is open in page number 12. So I'll write here to cash rupees 5 lakhs. So the transaction has been recorded on the credit side of the cash book and debit side of the bank account. That means both the aspects of the entry, the debit aspect and credit aspect, have been posted to the ledger. So when you prepare a cash book, you don't again prepare a cash account, because cash book and cash account are one and the same. So I have recorded it on the payment side because it's a payment of cash for the business, and then I have debited it in the bank account. Okay. This is how we record the cash transactions in the cash book. Purchased goods for cash rupees 1 lakh. Now again, if you see the transaction, it is just a payment. So I will go to the payment side. 3rd January 21, I will write here by purchases account. I don't know the page number. Let us assume it is page number 15 in the ledger. I will write 1 lakh rupees, on the payment side. I have recorded a payment in the cash book. Now I have to credited the cash book. Now I have to debit the purchases account. So what I'll do is I'll open purchases account, debit, credit. I will write to cash, rupees 1 lakh. So I've recorded the debit aspect. Next, purchase stationery for cash 5,000. Again, this is a payment of cash. Hence, I'm going to record it on the payment side of the cash book. 4th January 21. Buy stationery. Let us assume it is in page number 16. Rupees 5,000. So now what should I do? I should go to the stationery account in the ledger. Debit, credit, and I will write to cash account in the stationery account. Okay. So I have recorded the payment in the cash book and I have then recorded it in the stationery account as well. Sold goods for cash. On 5th January I have sold some goods for cash for rupees 2 lakh. So it's a receipt of cash. When I sell goods I will get some cash. So I'll write here to sales, rupees 2 lakhs. Now I have recorded a receipt. I have recorded in the debit side of the cash account. So now the sales account has to be credited. I will open sales account, debit, credit. I will write buy cash, rupees 2 lakhs. So this is how I post this in the sales account. Next, paid wages in cash, rupees 50,000. So how do I record the transaction? 6th January 21. It is a payment. That is why I am recording it on the payment side. By wages, let us say it is in page number 17, rupees 50,000. So what should I do next? I should go to wages account. And write on the debit side to cash, rupees 50,000. Sorry, 50,000, yes. So this is how I record the cash transactions in the simple cash book. Now at the end of the month, we have to balance the cash book. In our earlier videos, we have learned how to balance a ledger account. In the same way, we are going to balance the cash book. As I told you earlier, cash book and cash account are one and the same. When we maintain a cash book, we are not again going to maintain a cash account because both are going to be replica of each other. There will be duplicate. So we are not going to do duplicate accounting. Cash book and cash account play the same role. So I have to total both the sides. The total of the receipt side is 22 lakhs. Whereas the total of the payment side is 5 lakh plus 1, 6 lakh 50,000, 6 lakh 55,000. So the receipt side is higher. So the total of the higher side has to be written in both the columns, 22 lakhs here and here as well. Now we have to find out how much we have to write in this column so that the total of both the sides become equal, so that both the sides will balance. That means they will become equal. So here the total is only 6 lakh 55,000, whereas the total is 22 lakh. So how much should I write here in this column so that both the sides will become equal? So we have to find the difference between the receipt side and the payment side. 22 lakhs minus 6 lakh 55,000 is 15 lakhs 45,000. If I am correct, it is 15 lakh 45,000. So if I write 15 lakh 45,000 here, both the totals of both the sides will balance. I will write here buy balance carried down on 31st January 21. Then the same thing has to be brought forward and written on the higher side on first day of the next month, 1st February 21. I will write to balance brought down. Now what is this brought down? Balance brought down. This actually refers to the difference between the receipt side and the payment side. That means I have totaled the receipt side, I have subtracted all the payments, and this is how much I am left with on the receipt side. So 22 lakh minus 6 lakhs 55,000 comes to 15 lakh 45,000. This also represents the cash in hand on 1st February 2021. This will be shown in the trial balance in the debit column. Okay, so this is how we prepare a simple cash book. Now when we prepare a simple cash book, there will be no journal entries which we will be recording in the cash book. Like for this transaction, cash introduced as capital, we normally write an entry cash to capital. This entry is not going to be recorded anymore because the same thing is being recorded in the cash book, but in a very simpler manner. Cash deposited in bank to cash. The same thing is being recorded in the cash book, but not in the form of a journal entry, but using a simpler logic. Okay, but if you write journal entries and prepare ledger accounts, you will find that the outcome is one and the same. Purchase goods for cash, entry would be purchases to cash, purchase account will be debited, cash account will be credited, same thing will happen here. Purchase stationery for cash, stationery to cash, stationery will be debited and cash will be credited. Sold goods for cash, entries, cash account, attached to sales account, cash account needs to be debited, sales account needs to be credited. The same thing has happened even in here. Paid wages in cash, wages account attached to cash is the entry, wages account should be debited, cash account should be credited. The same thing is happening here as well. So when you prepare a cash book, you don't again pass journal entries relating to cash transactions. In our next videos, we'll learn about a bank book. Okay, thank you.